Welcome to the May 14th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and once a week, this video replaces the written commentary portion of our report. Hopefully it serves a nice change of pace as well as offers some insight as to how we set up our charts, what time frames and indicators we use. The chart on the left is the daily chart with a 10, 20 EMA, 50 and 200 SMA. We also have an RS line. This is the relative strength, which is the price of the chart divided by the price of the S&P 500 when that is plotted on a daily basis. And then we have volume with the moving average of volume. Pretty much the same setup on the weekly. We have a 10 and 40 week, which are most important. Then we have the 20 EMA and the 30 SMA up there. So we're going to run through a few broad market averages. Then we'll cover some sector ETFs, and last we'll share our thoughts on what to expect over the next week or two from the broad market averages and individual setups. So first up, the S&P 500 finally broke the 20-day EMA, closed below the 20 on 5/11, and followed through to the downside. So that is a sell signal generated on a break of the 20. Which suggests that the index may need several weeks of basing to digest the recent advance. However, that is just a guide and not a prediction. The S&P could recover back above the 20-day EMA and attempt to set new highs. But after the recent sell-off, it being a sharp one, generally speaking, the first touch of the 10 or 20-day EMA after a sharp sell-off is tough to punch through without some sort of pause. So if the price were to push higher on Friday or within the next few days, we'd expect it to stall up in this area and then sell off. So whether or not the S&P needs to undercut the 50 MA, whether or not it's bottomed already, or it will have to come back down into this 3,800 area, we have no clue. We really don't predict price action here. We just react to what it's doing, and it's served us well over the years. There's no reason to change. On the NASDAQ composite, as you can see here, it already had that sharp sell-off in the first bounce and then was smacked back down, already below the 50-day MA with the 20 and 10 EMA declining. So there's clear resistance here in this area. If it can even get close to the 50 MA, it'll have that 10 and 20 and the downtrend line and the 50 all in that area. So if the NASDAQ can hold 12,800, great. May need to test the 200-day MA, which after such an impressive advance might not be a bad thing. So what we're looking at is possibly several more weeks of chop in this index. Again, this is not a prediction. And something to note on the weekly chart on the right here, the price action has held above the 20-week EMA on a closing basis the entire rally. And as of Thursday's close, still have Friday session to go, the NASDAQ is below the 20-week EMA for the first time. So if it closes there, that would be a change of character. Let's take a look at a few growth-based ETFs. Reason being is that that's what we focus on in this report mostly is we like to trade explosive growth stocks. So right now they are out of favor, and the chart of FFTY reflects that. It's a pure chop fest. Not really doing much of anything with the RS line here setting new lows ahead of price, so it's relatively weak. Same goes for IWP, which is a mid-cap growth ETF. Though it's a little bit more constructive, it broke the downtrend line and rallied. Rallied to or near the prior high, but note the RS line was barely off the lows here. Just really relatively weak versus the S&P 500, which was setting new highs for the past few months. So clearly growth stocks are out of favor and will likely remain so for a few more weeks. Again, this is just a guide, not a prediction. Anything can happen, and we always want to go with the flow. Let's run through a few sector ETFs to get an idea of what's going on there. In terms of what's holding up and showing relative strength. So SMH, like most tech, is just below the 50 MA, like the NASDAQ. Nothing really going on there, nothing constructive. It's just a lot of wide price swings and nothing tight. XLY, this is the consumer discretionary, Just lost the 20 and the 50, hit pretty hard, nothing going on there. And XLB, which is the materials, is clear leadership, pretty uptrend, still above the 20-day EMA while the S&P is below. XLK, like the NASDAQ, below the 50 MA. This is the technology ETF. Industrials just broke the 20 on Wednesday but recovered on Thursday, still in an uptrend, though recent volatility may lead to more sideways action. XLV is the healthcare, and it's moved to new highs with the S&P, so that's pretty good. Still holding the 20. And we have energy, which was forming a nice base and moved higher off the lows of the base, but ran into some resistance and stalled. We'll just have to see if energy can move out again. And it's been in base mode now for about 8 weeks after a pretty explosive move up. So we'll just have to see if there's another leg up in oil. Utilities down to the 50, not leading. And XLF, the financials above the 20 EMA. A rough pullback this week though. Some volatility here, which could lead to some chop. So just a quick recap on those ETFs. We have materials looking pretty good. Energy possibly could become leadership. XLF still in the uptrend, providing leadership. And during our weekend routine, we really dive into what groups are working when we run through our 197 group industry group scan, which is on MarketSmith. We run a lot of scans on TC2000, which are great, looking for subtle things like pocket pivots or weekly hammers, monthly hammers, and our 7 days on the daily, weekly, and monthly. But on the MarketSmith platform, we really like it for fundamentals, but also for industry group scanning. So the big question is, what next? With the NASDAQ in chop mode, we know growth stocks are not in favor, and until there's a clear buy signal with a follow-through day or the NASDAQ reclaiming a 20-day EMA that's beginning to rise up here, not something that's coming down, those are potential buy signals that we'd be looking for. As of now, there's nothing really to do in the NASDAQ, and we're not the type of report that we're going to buy a pullback in the NASDAQ and look for a bounce into the 50. We're more trend traders. So rather than trying to chase every swing in the market, we prefer to wait for conditions to set up the way we want and for our timing model to generate a buy signal. So growth is right now a tough place to be. Nowhere to look for any kind of exposure if you want to try and make some small gains in a tough market. If the S&P 500 breaks the 50 MA and is unable to recover, I think that would be a sign just to pretty much avoid equities unless commodity stocks like oil hold up. A few of the stocks that we are currently watching are, try to break out, and it's had a rough go of it the past week with the market pulling back. If FCX were to tighten up here for a few weeks and then attempt to break out, that could be interesting. We have TMST still pretty tight. And again, let's see what these energy-based stocks do. CLR stalled at the prior high. EOG is pulling back in, though volume is relatively lighter but above average. And this pullback is a little bit volatile, and there's a gap down in the pullback, so it might need more time sideways. Even MTDR, which was one of the stronger looking stocks within the group, it had that nice downtrend line break, rallied, pulled back into the 10-day MA, found support, and then broke out. But it failed on 2 attempts here at 30, and these are pretty ugly candles. So energies and materials, some spots to focus on there. If the S&P 500 holds up above the 50. Let's take a look at Tesla. Just want to see what this big-time former leader broke down in February, lost to 50. Tried to break its downtrend line, but failed to hold on to the 50. Sold off, and now it's to the 200-day EMA and could not find support and broke down below 200 on pickup in volume, which is interesting as this should be a pretty good spot for support to step in. This is the first touch of the 200-day MA since March of 2020. So I would not be surprised if Tesla were to bounce on Friday and close back above the 200. Now, it would be a big surprise if Tesla were to break the 200, not recover next week, and then begin to sell off sharply from there. And a few stocks that were interesting this past week. Roblox tried to break the downtrend line. It did for a day and then held up the following day and then sold off below the 10 and 20 on Thursday. But if the price can continue to hold above 64 and then start to round out a few weeks from here, could be something that's in play down the road. Another stock that's holding up well is CF, which recently broke out to new highs. Pullbacks held above the 10-day MA. The volume was kind of high on during the pullback, but this is something that could be in play if the S&P is to find some traction next week. So that's a wrap for tonight's video. Thank you for joining me, and we'll see you again next week. Have a great weekend.